Well, after the release of the CPI data this week, there has been a considerable debate going on about whether the RBA will cut in February. In fact, I covered this in a recent show where I spoke about the number wanging that goes on below the waterline and the fact that the CPI number doesn't necessarily say what you think it says, but of course it's more politics than anything else. As a result of this, we've seen all of the banks now, the NAB was the last one to come out and say, the RBA will cut. There's a cash rate cut in February, most likely because of the fourth quarter CPI, etc., etc. Now, it must be said that not everybody is equally on the same page. Warren Hogan, who has always a more bullish view of where things are going from a rate perspective, suggests that there was less than a 50% chance of the RBA cutting, saying the economic case is not there. He said, we've seen a big improvement in the consumer sentiment last year. The tax cuts have finally got some traction. The jobs growth is showing low retail sales. And the big one is the rise in job vacancies from already high levels. This is all telling us that the economy is actually improving, and that's the reason there's a question mark on whether inflation will get down into the target band and stay there. If you look at what's happened in the US, the fact that they held on cutting rates further suggests that this is correct.